Ever get that feeling of like unlocking a secret, getting access to information that maybe most people don't really see?
Hmm.
That's kind of what we're aiming for today. We're doing a deep dive into a story that's been, well, pretty quiet for about 10 years,
Yeah.
but is making a big comeback now.
Yeah,
We're talking about the Ynez unit, an offshore oil and gas operation in California, now run by Sable Offshore Corp.
exactly. And we've got some really interesting source material here. It's an SEC Form 8K filing dated May 19th, 2025.
Right.
And that includes, their official press release,
Yeah.
an investor presentation.
Yeah.
It's basically the company telling the market what's happening. Lots of detail.
So our mission today, if you will, is to really understand why Sable restarting production at SYU is such a, well, a significant event. This isn't just flipping a switch, right?
No, definitely not. It's the culmination of a lot of work, especially overcoming that big hurdle from 2015.
Ah, yes, the shutdown.
Exactly. The 2015 shutdown of the Santa Ynez unit. A lot of you listening might remember it was triggered by a pipeline issue. That pipeline was operated by Plains All-American AAPL.
Right, and it just stopped everything.
Completely halted production for, well, a decade.
But here's where it gets really interesting, a key part of the story. Sable Offshore actually bought that pipeline from AAPL.
That's a huge piece of the puzzle. They took control of the very thing that caused the shutdown in the first place. Gives them control over getting the product out.
And it sounds like things are moving fast now. They're expecting oil sales pretty soon.
Yeah, the plan is July 2025 using the Las Flores pipeline system. So, yeah, these documents give us a great look under the hood. Where should we start digging in?
Okay, let's start with the headline news. Production is actually back online. Oil is flowing.
That's right. The press release confirms it. May 15th, 2025, production restarted at the Santa Ynez unit.
Okay.
Initially, it's 6 wells on Platform Harmony, and that oil is flowing to their onshore facility at Las Flores Canyon.
And do we know the initial flow rate? That's always a key number.
They're saying approximately 6,000 barrels of oil per day from just those 6 wells.
Just 6 wells. Okay.
Yeah, so that's the starting point. But what's really catching attention is how these wells are performing in tests.
Ah, right. Because the data suggests, well, better than expected results, doesn't it?
Exactly. They've tested about 30% of the producing wells on Platform Harmony. That's one of the 3 platforms out there. It has 32 producers total.
Mm-hmm.
And these wells are consistently testing stronger than they were right before the shutdown in 2015.
Wow. And back then, the whole unit was doing, what, around 45,000 barrels a day equivalent?
Yeah, about 45,000 BOED, that's oil and gas combined. So if individual wells are stronger now, well, that points towards potentially much higher overall output, maybe better tech now compared to 10 years ago.
That's a really significant observation. Stronger wells after sitting idle for a decade. And they plan to test the others on Harmony, too.
Yes, absolutely. The plan is to work through the remaining wells on Platform Harmony, so we'll get an even clearer picture of its potential soon.
Okay, so Harmony is the first one back. What about the other platforms? What's the timeline look like?
So the investor presentation lays that out. Platform Heritage, that one's got 44 wells, is expected online in July 2025.
Okay, next month then.
Right. And then Platform Hondo, the third one with 26 wells, is slated for August 2025.
So a phased restart. Harmony, then Heritage, then Hondo. Makes sense.
Yeah, bringing the whole unit back online step by step over the summer.
And of course, none of this happens without the pipeline being fully operational. That was the original problem. How are things looking there?
Good news on that front, according to the documents. The repairs needed on the Las Flores pipeline system, that's the onshore part, were finished May 18th, 2025.
Okay.
That included work at Gaviota State Park, which was a specific requirement from the consent decree governing the pipeline.
So that regulatory hurdle is cleared. What's left for the pipeline itself?
Well, they use hydro testing, basically filling it with water under pressure to check for leaks. 7 out of the 8 sections have passed.
Just one to go then.
Just the final test is pending. Once that's done, they should meet all the conditions in the consent decree to fully restart the onshore pipeline. That's, critical for moving the oil.
Absolutely. You can pump all you want, but if you can't move it. So assuming that last test goes well, what's the immediate plan? Storage.
Exactly. They need to fill up the storage tanks at Las Flores Canyon. They've got about 540,000 barrels of capacity there.
That's quite a bit.
Yeah, and they expect to have that filled by mid-June 2025.
And then the cash register starts ringing. Resumption of sales.
That's the goal.
Yeah.
With storage filling up and the pipeline hopefully getting the final okay, Sable expects to restart oil sales in July 2025.
A decade later, that really marks the commercial comeback.
A huge moment for them, definitely.
Now, restarting like this, especially with those strong well tests, it must change their outlook, right? The documents mention updated production forecasts.
They do, and it's a pretty significant jump. The new guidance for net average daily production for the second half of this year, 2H25,
Yeah.
is now 40,000 to 50,000 barrels of oil equivalent per day, BOED.
Wait, didn't they previously guide for something like 20 to 25K?
Exactly. They've basically doubled their expectation for the second half of the year.
Wow. What's driving that confidence? Just the strong well tests.
That's likely a big part of it, yeah. Plus, confidence in hitting those restart timelines for Heritage and Hondo. And don't forget their ownership stake.
Right. They have 100% working interest.
100% working interest and an average net revenue interest of 83.6%. So they get the lion's share of the revenue from that increased production.
Okay, so production looking much higher. What about the costs? Getting all this oil out isn't free. What's the guidance there?
Right. They updated cost guidance, too, for 2H25. Lease operating expense, or LOE, is projected at $11 to $13.50 per BOE.
Okay.
And interestingly, they note that 75–85% of that LOE is fixed, so it doesn't scale directly with production volume, which can be good.
What else?
Gathering, processing, transportation, GT&T, they estimate at $2.50 to $3.50 per BOE. And cash general and administrative G&A is in the same range, $2.50 to $3.50 per BOE.
And taxes.
Severance and ad valorem taxes are expected to be pretty low, actually. Only 0.5% to 1.0% of revenue.
Okay, so those are the operating costs per barrel. What about capital investment needed to get things running smoothly, CapEx?
For the second half of 2025, they're forecasting facilities CapEx. That's money spent on the physical plant and equipment between $50 and $60 million.
Right.
And then workover CapEx, that's investing in existing wells to boost their output, is $20 to $30 million.
So total operational CapEx for the rest of the year is somewhere between $70 and $90 million.
Exactly. That's the investment needed to, bring those other platforms online and keep everything humming.
The press release also had a quote from Jim Flores, Sable's CEO. What was the main message there?
He sounded, well, pretty proud, emphasized doing this restart safely and responsibly.
Understandable.
Yeah, and he pointed to those strong well tests on Harmony as confirmation that the SYU reservoir is still, quote, prolific, even after 10 years offline. He also mentions excitement about their future plans and thanks stakeholders for their cooperation. Standard CEO stuff, but it hits the keynotes.
Definitely sounds like a milestone moment for Sable. Maybe we should quickly cover who Sable Offshore is for those less familiar.
Sure. They describe themselves as an independent oil and gas company headquartered in Houston.
Okay.
Their main game right now is developing the Ynez unit, those assets in federal waters off California. And they make a point of highlighting their team's experience, specifically operating safely in that region.
Right, experience counts for a lot there. Let's dig into the history of the SYU itself. It's been around a while, hasn't it?
Oh yeah, long time. Discovered back in 1968.
Wow, 68.
Yeah. And then ExxonMobil gradually pulled together over a dozen federal leases to create the unit.
Yeah.
Platform Hondo was the first one, started production way back in 1981.
81, okay.
Then Harmony and Heritage both came online in 1994. And interestingly, those two newer platforms actually have their own dedicated drilling rigs on them.
Ah, suggesting they always planned for more drilling from those platforms.
Seems that way, yeah. A sign of long-term development potential.
And the overall scale, how many wells are we talking about across the unit?
Total of 112 wells listed. 90 are producers, 12 are injectors used to maintain pressure, and 10 are currently idle.
All right.
And Sale says they've already identified over 100 potential future drilling spots, infill and step-out wells.
So plenty left to do. And these platforms aren't in super deep water, right?
No, relatively shallow by today's standards. 900 to 1,200 feet of water, about 5 to 9 miles offshore Santa Barbara County.
And the onshore facility at Las Flores Canyon, that's Sable's too.
Yep, wholly owned.
Yeah.
Critical piece for processing everything that comes off the platforms.
Right.
And just to recap, the whole thing was shut down from June 2015 to May 2025 because of that Plains pipeline issue. Exxon safely shut things down and maintained it, and then Sable eventually bought the pipeline from Plains, or AAPL.
Okay, got it. Now, looking ahead, there was mention of carbon capture and storage, CCS. What's the plan there?
Yeah, they're actively looking into it, evaluating using the geology and maybe some of their existing infrastructure at SYU to capture CO2 emissions from their operations and store it underground permanently.
That could be really important, especially operating in California.
Absolutely. Given the state's focus on climate, Having a viable CCS strategy could be key for their long-term license to operate.
Makes sense. Okay, let's get a bit more technical. What's the remaining resource potential here? How much oil and gas do they think is left?
Well, historically, SYU produced a lot, over 671 million barrels of oil equivalent between 1981 and 2014.
Okay.
In 2014, the last full year, it was doing about 29,000 barrels of oil and 27 million cubic feet of gas per day, gross.
And looking forward.
Sable expects a pretty low and stable decline rate once things are fully restarted, maybe around 8% per year over the next 5 years, based on what they call their NSAI low estimate base contingent resources.
Contingent resources. So potential, but not quite proven reserves yet.
Exactly.
Wow.
Potentially recoverable, but still needs work or confirmation. But that low decline rate, that's attractive.
Very attractive in this business, means less drilling needed just to stand still.
Right. And beyond those existing contingent resources, remember those 100-plus additional drilling opportunities they've identified.
Yeah.
There's still a lot of potential upside. And remember, Exxon drilled a record-breaking extended reach while they were back in 2000.
Extended reach, meaning drilling sideways for a long way from the platform.
Precisely. Accessing parts of the reservoir far away without needing a new platform shows the capability.
So what's the total estimated recoverable resource number that Sable is putting out there?
Their management estimate is around 1.2 billion barrels of oil equivalent total, net.
Okay.
And since about 561 million net BOE have already been produced.
That leaves, carry the one, about 646 million BOE net still potentially recoverable.
According to their estimates, yes. Now, these are always estimates, there's uncertainty, but it points to a very substantial remaining resource base.
You mentioned they own the Las Flores Canyon infrastructure. How does that help their economics?
Big advantage. Owning it means lower cash costs because they aren't paying third-party fees for processing, storing, transport connections, etc.
Right.
They've got the whole setup: cogeneration, water handling, pipeline terminal, those big storage tanks, 540,000 barrels, water treatment, LPG facilities, gas plants, even their own power generation on site.
Pretty self-contained.
Very much so. They sell gas and NGLs locally in Southern California, and the oil goes to local refineries priced off Brent crude.
Okay.
And Sable believes the facilities were kept in good shape during the shutdown. Plus, again, that's where they're looking at the CCS opportunity.
Let's zoom out again. The acreage itself, how big is the San Ynez unit lease area?
It's all in federal waters. 16 leases covering about 76,000 acres. First leases date back to 1969. The unit agreement formalizing it was in 1970. They also own the onshore land for the facility, about 1,480 acres, though only 35 are actually developed.
Gotcha. And the plan for new drilling, the undrilled inventory, what's the thinking there?
They're looking at developing it with wells spaced closer together, now 80-acre spacing versus the original 120-acre that's typical as the field matures.
Targeting specific zones.
Yeah, they're focusing on a high-quality layer called the Monterey Upper Siliceous Reservoir, specifically areas where the rock has been altered, diagenesis, and where there's more natural fracturing.
Okay.
The idea is to drill the wells in a way that hits as many of those natural fractures as possible to maximize flow. They're talking about having over 2,000 feet of productive wellbore per well, on average.
Okay, maximizing contact. Makes sense. Now, just to quickly recap the near-term restart schedule for the platforms.
Sure. Harmony started May 15th. Projected net production for the second half of 25 is roughly 15,000 to 19,000 BOE. Heritage restart expected in July. Projected 2H25 net production around 19,000 to 23,000 BOE.
Okay, the biggest contributor initially.
Looks like it. And Hondo restart planned for August. Projected 2H25 net production around 6,000 to 8,000 BOE.
Got it. And the oil from Harmony is just being stored for now.
Yeah, filling up those tanks at Las Flores Canyon while they wait for the final pipeline green light.
What about the longer-term operational plan, beyond just the restart?
The strategy seems to be maintain what they have, reinvest capital smartly, and optimize operations to get good initial rates from new wells.
Okay.
They have a chart showing projected net production gradually increasing from 2H 2025 out to 2035, with CapEx kind of fluctuating year to year depending on drilling plans.
So growth is expected beyond the initial restart ramp-up.
That's the plan they're laying out, yes.
The presentation also dives deep into those contingent resource numbers. It looks complex. Any key takeaways?
Yeah, it's detailed. They break down the net contingent resources under different scenarios, like using official SEC pricing, versus what happens if they install ESPs, these pumps, to boost production.
Ah, electric submersible pumps. Okay.
Right. And then estimates for their new drilling program and their workover program on existing wells. They give volumes, CapEx needed, and PV10 values for each slice.
PV10, the present value calculation.
Standard industry metric, yeah. They show it visually, too, with pie charts. But the key thing to remember is these are unrisked contingent resources.
Meaning there's still technical and commercial risk they might not recover at all.
Exactly. It represents the potential if everything goes according to plan. The presentation does outline the assumptions they used for prices, well, success rates, etc.
It's clear getting to this point involved clearing a lot of hurdles. The sources list some key milestones achieved recently.
You do. It's quite a list, actually, starting from early 2024. Getting BOEM approval, the federal agency, getting affirmation from the state fire marshal, closing their business combination deal, getting Santa Barbara County's nod as the operator.
Lots of regulatory steps.
Absolutely. Plus, confirming the pipeline hydro tests, doing the final repair work, and then the big one, restarting Harmony on May 15th. And they anticipate that final pipeline test this quarter.
Safety and environment are obviously huge in California offshore. What's Sable's pitch on their track record?
They heavily emphasize their management team's past safety record, specifically in California when they were at a previous company, Plains Exploration, or PXP.
Okay.
They list specific awards and commendations they received back then from the county, state, even national awards for best practices, environmental stewardship, safety performance, air quality stuff.
So they're pointing to past performance as evidence of commitment.
Pretty much. They also mentioned partnering with local fire departments for training, trying to build that trust factor.
Okay, let's switch to the financials. We touched on guidance, but what are their main financial goals now that they're restarting?
Well, number one seems to be refinancing their main debt, that first land term loan.
Makes sense. Probably want better terms now that production is flowing.
Likely, yeah. Then optimizing their overall capital structure for shareholders, setting up a hedging program to manage price risk.
Standard practice.
Right. And then, importantly, instituting what they call an aggressive shareholder return program, targeting a fixed quarterly dividend plus opportunistic share buybacks.
Returning cash to shareholders, what does their balance sheet look like right now?
Okay, as of mid-May, the share price gave them an equity value of about $2.6 billion. They had around $855 million in net term loan debt as of March 31st.
Okay.
And about $189 million in cash. That puts their total enterprise value around $3.25 billion.
And their leverage target?
They're aiming for a conservative profile long-term, targeting net debt to EBITDA around 1.0x.
Okay. Relatively low leverage. So wrapping it all up, how do they pitch this whole thing as an investment? What are the main selling points?
They boil it down to a few key highlights. You've got a substantial, mostly oil production base restarting.
Right, 83% all.
It's a long history behind the asset, those stronger than expected initial well tests, a projected shallow decline rate, which is great for cash flow, an attractive valuation compared to their resource estimates, and they argue a significant discount compared to their peers based on that PV10 metric versus enterprise value, plus that deep inventory of future drilling spots.
So it's a mix of sort of de-risked restart cash flow plus future upside potential.
That's the narrative, yes. Attractive returns from low-cost, low-decline assets enabling dividends and buybacks, primed for growth with relatively modest investment, substantial upside from the known reservoir, high operational control, conservative finances, good infrastructure access, and, that commitment to HS&E, including the CCS angle.
Well, that was definitely a deep dive. We've covered a lot. From the history to the restart details, the resources, the financials. It's quite a story. Sable Offshore bringing SYU back after 10 years.
It really is. You see this asset, dormant for a decade, now coming back online, and maybe even stronger than before based on those initial tests.
Yeah.
Combine that with the significant resource potential they believe is still there, and their focus on financial discipline and shareholder returns. It's definitely one to watch in the energy space.
It really makes you wonder, though, considering it sat idle for so long and the wells seem strong, what other maybe surprises or untapped potential is still locked away in the San Ynez unit? And, with Sable seriously looking at carbon capture, how does that change the long-term picture, both for their viability in California and just the environmental footprint? Lots to think about there.
Absolutely. This restart could really shift things for California's energy scene. And it's a fascinating case study in how you bring legacy offshore assets back in today's world, potentially with a stronger focus on efficiency and environmental factors. Definitely something for you, the listener, to mull over.